Okay, so let's go variance. We are going to solve two. We only have two variance questions to solve, and then you are good to go. So first, let me clear one from the way. The rest are for you. The first one is reconciliation. How to prepare reconciliation. So let's go through slowly. What is reconciliation? You see, the difference between the actual profit and the standard profit is a variance that creates that. So if I have the standard profits and massage it plus or minus it with the variance, it should give me the actual profit. That's what we call reconciliation statement. So yeah, the examiner might give you the profits. Then you will calculate all the variances. Then you prepare a statement. That is all about. That is all about this. So we are through. So first, this is the budgeted data. It's for variance computation. Actual data is also here. Using marginal costing approach, it means no fixed cost. Reconciles the budgeted contribution and actual contribution. Your statement should show all the variance in much detail. So first thing, you do a lot of workings. A lot of workings. You must calculate the budgeted contribution. Pick everything from the budget. This is the direct labor cost. So add everything here. They say budget. Add everything here. The first workings you have to do before you start with the reconciliation. Even though the heading is reconciliation, start there with your budgeted contribution. Budgeted contribution. Which is equal to what's the budgeted selling price is what? Budgeted selling price from the question. What's the budgeted selling price? Pick everything from the budget. Standard selling price is here, 180. This is a variable cost, so 180. Less variable cost. Open a bracket, add all the variable costs together. Please, if you add all, you get 86.4, 22, 7.5. Answer. This one, let's just solve it. We'll finish right now. This one give you figure, this one give you figure. We'll finish right now.
116.4.
116.4, right?
Yeah.
So you open a bracket, you do your workings in there. For the examiner, you add plus 116, right?
Yes.
0.4. So what do you get as your contribution?
$63.6.
Bring the units produced, budgeted units. Budgeted units produced. Budgeted units. Budgeted units. Go to the question and pick budgeted units. What are the budgeted units? 10,000 units. 10,000 units. What's the total budgeted profit? Total budgeted contribution growth. 63,600, right? Do you agree? Start calculating the variances into detail.
636,000.
Come again.
636,000.
Oh, okay. Good. Then go ahead and calculate your variance. That's the first steps when they ask you to do reconciliation. Step 2, the variances, all variances. In more detail, variances. First variances. Number 1 is on sale. There are 2. Selling price variance. Selling price variance, compare the standard selling price of the goods. Standard selling price of the goods. Standard selling price. Compared with the actual selling price. Standard selling price of the goods from the person will be, we'll finish very soon. Standard, we have it already, 180. What's the actual selling price? Actual selling price is what? 184. 180 against 184. Uh, 180 against 184. Variance is 4. Adverse or favorable? Adverse or favorable?
Favorable.
Why favorable?
Because it's positive.
Any other reason? Because this is
because your hold on a second.
Complete it for us.
Your actual selling price is actually more than your standard selling.
Okay, so I take that. It's because it's a revenue and we have earned more, or it's positive and it's for revenue. Imagine it's a cost and it's positive. I could have said that it is adverse. Then this is variance per unit. Bring the actual selling unit, actual sales unit. What is actual sales unit from the question? Actual sales unit. Where is it? Check. 9,000, right? Have you seen it? So 9,000. What's the answer? We'll finish right now. Variance, there's no difficult. Variance, if anybody lied to you, no. 4 times 9,000 will give us
254.
come again. 49.
36,000.
36,000.
Favorable. So here should be F. Here also should be F, favorable. Then you come here and come and do the B. The next variance you have to calculate standard selling. You calculate what we call sales volume variance. Constantly sales volume variance. The word volume means quantity. Here is the difference between selling standard budgeted sales units minus the actual sales units. Bring your budgeted sales units minus the actual sales units. What is a budgeted sales unit? Let's go. We'll finish very soon. Budgeted sales unit is what? 10,000. Actual sales unit is what? 9,000. So 10,000 here. Bring the unit here. Then here will be 9,000. What's the difference? 1,000. Adverse or favorable?
Adverse.
Adverse, right?
Yeah.
Variance. Then multiply by the standard. This one using contribution, so multiply by standard contribution per unit. If you are using the absorption approach, you multiply by the standard profit. So these are the difference. One is on standard profit, one is on standard contribution. And thank God we calculated the standard contribution already. This is the standard contribution, 63.6. 63.6. See this. What do you get? $63,000.
600.
Adverse. That's all. So we are continuing. Calculate the material variances. That's all. Material there are two. That is 6 variances we are done. The next one, number 2, is material. All the material variances. Material variances there are 2. We have the material price. I normally like, you see, I have to be very honest. I know that some of you like the formula. Maintain it, don't change it. Some of us will also train with the principal approach. Whichever one, so long as it will give us a perfect answer. Answer that is okay. You don't have a problem. But where one is likely to confuse us, that is where we know we must rank one. So that is that. So now I mostly go by my approach. Expected. So here the material price, it deal with the input. Pick the raw material they have used. Go to the question and pick the raw materials they have used. Raw materials they have used. So actual raw materials they have used 74,000 kgs. So how much they should have paid for the standard at standard cost? At standard price. How much they should have paid? Go up and pick the standard price. The standard price is here. This have you agreed? This is a standard. This is called price. This is called cost. This is called usage. This one is called usage. So you multiply 74 by 10.8. So 74,000 times 10 cities, 80 pesos. This is what you get.
$799,200.
700 and
99,200.
okay, then you pick the actual material cost. So you only can pick the actual material cost. How much was the actual? There's not calculated it to. This is the actual cost. 74 by 11.2. 74 by 11.2. What do you get?
Eight hundred and 828, 800.
800 and
800.
okay, so what's the variance? Adverse or favorable?
Adverse.
Adverse.
Answer.
Yeah.
Come again.
29,600.
29,600. That is adverse. Good. Let's do the B.
Target,
Yes, please.
target. Please. You see this one, we are getting a positive figure, but we are still saying adverse. Please, can you highlight on the adverse for me?
Okay, here this is a cost. Cost when it's positive. So it's not necessary that all positive are adverse, all positive are favorable. No, we don't go by that. What we go by is that check what we are calculating. This is a material price variance. So it's about the price. So in that case, when the expected price is less than, or the actual price is much more, it will create, is it all the variances here to be, we will normally write them positive. It's only when you use the formula, then you can get negative and positive clear. In this approach, all the calculation I'll do, whether adverse or favorable, I'll still write positive. I won't write any negative here because of the principle base. So here, what you do is that if it is a cost, material is a cost to us. Material is not a revenue. So in that case, when the actual is more, then it is an adverse to us. So that means, so in all your answers, to be positive, positive. Even if you check here, this is sales volume. We budgeted to sell 10,000, but we did sell 9. Could have said it's negative, right? But I still make it positive. And still said adverse because this is a revenue. This is a sales unit. We should have sold 10,000, but we did sell only 9. So hence we are making some deficiencies, or we couldn't sell all what we're supposed to. So hence adverse of 1,000. Agreed. So with the principle base, we won't get negative or positive won't matter. Negative and positive will matter when you're doing the formula. And if you're really comfortable about the formula, this is 11 fact. You can still stick to it, but just make sure that you use your formula to solve and make sure that you get the same answer as what we have here. Then you are good to go. Agreed.
I agree. So explain the sales volume variance. Let me see.
Sales volume variance is talking about the difference between your budgeted sales and your actual sales. So we budgeted that we have to sell 10,000 units. By the end of the day, we end up selling only 9. So the actual sales unit is lower, less than what we're supposed to. So we couldn't sell more. Hence, the variance is adverse. So we should have just put inside the brackets, but here the bracket won't make any difference. So we just ignore the bracket and then just write the figure there. The adverse here tells it all rather than putting inside brackets or making it negative. How do you agree now?
Yes, I agree.
Good. So let's do material usage variance. Round two, I start with expected. Here you open a bracket, pick the actual production unit. Pick actual production units, actual production. Why you should show yourself. Actual production. Okay, production and sales are the same. So actual production is 9,000. Multiply by the standard usage. Multiply actual production by standard usage. So 9,000 by 8. 9 times 8. 9,000 units by 8 kg. So here the answer should be in kgs. I'm expecting you to write kgs on top. What do you get?
72,000.
So we should have used 72,000 kgs of material. What is the actual material usage? The actual goods we used, they were actual goods we used, actual material, 74 kgs. So have you used much more than we're supposed to, right? We have used more than we're supposed to. We're supposed to use 72, but we have used 74. So what's the difference? What is the difference?
1,000.
1,000. Are you sure?
Adverse. 2,000.
1,000 advert.
Is it 1,000 or 2,000?
2,000.
2,000.
Okay, so 2,000 adverse. We have used raw material much more than we're supposed to. So right here, variance. But I see, I always say that variance should be reported in money so that we can see the impact. If you say 2,000, it will make sense. Convert it to money. So here we have a variance in terms of kg multiplied by the standard material price per kg. What's the standard material price per kg here? 10.8. You have it here. This is the standard material price. If you go to the question two, you can also get it in the question. Standard material price is 10.8. Here's it per kg. So you multiply by standard material price, which is 10.8. I did the mathematics for me. Let me write it the answer here. Variance. This is what you get.
10 point. What is it? 10.8.
Yeah, 10.8 times
1,600.
21,600.
21,600, right?
Yes.
21,600 here, and it's still adverse. We come and do number 3. I'm on labor. Labor first, I have to calculate labor rates. You can never say price. Price of a labor is the rate. So say rates, variance, labor rates. So put expected here. You see, we always say expected actual, expected actual. You're good to go. No formula work. If you're okay with the formula, stick to it. Don't change it. Pick the actual unit, which is the 9,000. Actual unit is 9,000. Times the standard hours. That's all. Standard hours. What's the standard hours? You see a direct labor. Standard hours is 1.2. Let me be sure. Let me clean some of the stuff. Standard hours is what? 1.2. So that I don't pick wrong figures. Standard hours is 1.2. Good. 1.25. What do you get? If you multiply 9,000 by 1.25, yeah,
7,050.
No, this is rate, no, rates. Rates, you have to multiply rather the hours, actual hours by the standard rate. So that one, pick the actual, let me come here. Oh, I was looking here, I'm supposed to look here. You pick the actual hours work by the standard rate. So sorry about that. Actual hours worked is here. 10,800 by standard rate per hour is here. 18. So 10,800 by the 18. Is it 18? It's 18 point, yeah, 18 flats, 10,800. So it should be 10,800 times 18. This is what you get. Yeah, if you are right, your final answer will balance. So if it doesn't balance, you get trouble, you said.
194,400.
194,400. 194,400. We finish this one right now. Put actual here. What's the actual labor cost? Actual labor cost. Pick the actual hours worked times the actual rate.
Mm.
So that's 19. So that'll be 10,800 times what? 19. What do you get?
205.2. 205.2.
Are you sure? This is 10,800.
Okay. 10,800.
Yes, times 19.
205,200.
Come again.
205,200.
Okay. So you see, labor. Our expectation is that we have to spend 194,000, but we end up spending something more, which is 200. So what's the difference and what's the
Okay.
variance?
$10,800. Adverse.
10,800 adverse.
Good. So if you calculate it to add on the day to balance nicely for you, if you don't calculate it to a two balance, because this is a reconciliation. All reconciliation should balance. B. Because something labor efficiency, we can never say labor usage. We don't use human beings, we beg you. We don't use human beings. We rather do what? Hire a portion of their time. So we measure their time by their efficiency by the time we hire. So it's the same as the material usage. Labor efficiency is the same as material usage, but just that it won't be nice when we say labor usage. All of us are labor. So if they say they are using human beings, no. So here too, you start with expected. That's the one I was calculating first. Pick the actual production unit, which is 9,000, times the standard hours. That was what I was calculated first, times the standard hours, 1.25. So 1.25 hours. What do you get? Put hours here.
11,250 hours.
Versus the actual hours. What's the actual hours worked? Actual hours worked from the question is that actual, show yourself actual hours.
10,800.
Good. So here, have they worked lesser than expected, 10,800. What's the variance, adverse or favorable?
Favorable.
Yes, you work less, so
Favorable. It's favorable.
The amount.
mm,
450. 450 hours.
And here it's
Favorable.
it is in hours, so you see it's in hours, so you have to convert this, multiply by the what you call standard
Standard rate.
rate per hour. So let's go and pick the standard rate per hour. We already have a standard rate per hour is 18.
18.
You put it 18. So this here. What do you,
That's 24.
are we safe? So 450 by
8,100 favorable.
come again.
8,100.
Good. The last one, then we are done. Number 3, we're on the fourth one. And at variable production overhead. Variable production overhead. Down to there are 2 types. A, we have the expenditure is the same as rate. Expenditure is the same as labor rate. Start by saying expected. Open brackets, go back to your question. That one, we measure it in hours. So pick the actual hours worked. Where's actual hours worked? 10,800. And multiply by the standard rate, which is 6 cities. So pick the actual hours worked, multiply by the standard rate. So what do you get? 6 times 10,800. That's the expectation.
64,800.
Times 6 cities. What do you get?
64,800.
64,800. Then the actual cost they incurred will be the overhead, variable overhead, they incur 70,000. Now they've done it here, 70,000. So the actual is 70,000. Favorable or adverse, and then the figure.
Say.
Yeah.
500.
Say.
Yes.
So, but this question, they didn't ask for the variable A. Or you are just doing.
No. Hey, it's there, Papa. Let me show you where they asked for it.
Okay.
Please, I'm trying to write it.
Oh, okay. So they say your statement should show the variance as much as detail possible. And
So
once
I can't see what you're saying, you know.
oh,
Okay.
and there's another thing here. They say we are doing contribution. How do you find contribution? Give me the formula for find contribution.
Isn't it your sales minus your variable cost?
Give me the breakdown for variable costs. What are the genetic composition of variable costs? Number 1,
Materials,
labor, and then
and variable production overhead.
So automatically you must include it to it. Okay,
So, but the information over here, okay, is there. Thank you.
Okay. What's the difference?
5,200.
5,200. Adverse or
Adverse.
that's all. Then that one also has what we call efficiency. So let me squeeze the efficiency here to go there, and then we are through. B, variable production overhead efficiency. It's the same as the labor efficiency. So go and copy your labor efficiency. The only thing we change is the rate. Labor efficiency, why you show yourself, copy labor efficiency. 11,250. Everything about the only thing we change is here. Only this side pay will change. Only this side pay will change. Everything is the same. So let me copy. Expected 9,000 times 1.25. Expected 9,000 units times standard hours of 1.25. We had 11,250. Labor hours is here. Actual hours worked, we had 10,800. Favorable of 450. Then this is variance in terms of hours. Then standard rate per hour. Standard rate. So that you have to go and pick the variable overhead standard rate. Let's go to the top. Standard. Variable overhead per unit is 6. So here you multiply by 6, not 18. That's the only place we change. What do you get as your final answer? And that's all. We are not going to do the reconciliation.
2,700.
So that will be 2,700 students. Now the next show the reconciliation statement. So you see operating statement or either reconciliation statement or
Tiger, please come down to that work and let me see something.
and it's favorable. Attach the favorable to it.
No, it's okay.
All right, so that is all. We are good to go. Now we are the reconciliation. So let's give it a very good title. They say we should use marginal proof. Reconciliation statement or reconciliation. So say reconciliation. All the 15 marks. Reconciliation statement. Start by saying do reporting currency here. Start by saying budgeted profit. What's the budgeted profit? First, we calculated. Where is the where yourself? 600 and what? 36,000. Is that so? Budgeted contribution. You have to write budgeted contribution. Budgeted contribution. $636,000. Then selling price variance. Selling price variance. Sales volume variance. What's the selling price variance? What do you get? Selling price variance. That was the first thing you did. Selling price variance. 36,000 favorable, 36 favorable. Right? F. F means we are adding. Sales volume variance. We've calculated sales volume. We had 63,600 adverse. 63,600. Hey, this is what you get. All right, so what do you get? 636,000 plus 36 minus 63,600. Answer.
$608,400 favorable.
608,000.
8,400.
Okay, then you write here cost variances. Cost variances. Right here favorable and right here adverse. And put the Ghana cedi down. So let's go cost variances. Now all the cost variances you are going to pick, we have calculated them already. Start from the material price. Was it adverse or favorable? Material price. It was adverse, 29,600 over here. Adverse, write it here, 29,600. Then write material usage. Material usage was 21,600 adverse. 21,600 adverse. Labor rate is 10,800 adverse, 10,800. Labor rate. Then labor efficiency. Labor efficiency. No. Labor efficiency is favorable, 8,100. 8,100 favorable. Then variable overheads. The overhead is expenditure 5,200 adverse. So variable overhead expenditure. It is 5,200. Then efficiency is 2,700 favorable. No, then there's a problem somewhere. Labor efficiency, was it favorable? Labor efficiency is favorable, 8,100. Let me see where I place it to. It's correct. So efficiency is also 2,700. Hey, what? Variable overhead expenditure. We had expenditure 5,200 adverse. Then variable overhead efficiency 2,700. Please add all for me. All the adverse one side, all the expenditure one side. You can say expenditure, all the adverse one side.
So your favorable is 10,800.
10,800. Then adverse, you add all adverse too.
Adverse is 67,200.
And the difference, 10,000 minus 67,200.
56,400.
56,400 adverse. Add all, what do you get? So you take it off from 608,400, what do you get?
552,000.
552.
52,000.
Is it 52 or 62?
552,000.
So this one should be the actual contribution. So we are going to calculate the actual contribution right now. So confirmation. In exams, you don't need to confirm. So confirmation, bring me the sales. We have to calculate the actual. Is there any shortcut to do the actual? No. Let's go long approach. There's a disaster here. Sales, what's the sales unit here? Multiply the selling price of 184 by 9,000 for me. 9,000 times 184, what do you get? What do you get? What do you get? Oh,
1,656,000.
1
1,656,000. 1,500,000. Sorry, 656,000.
okay, then let's do your material cost here. Material cost. Multiply the actual material. The actual material is 74 times 11. 74,000 times 11.2. 74 times 11.2
74.
times 11.2.
That's 828,800.
8.
28,800.
Then labor. Let's go and pick the labor cost. Labor cost, we multiply 10,800 by 19. By 19, 10,800 by 19.
205,200.
Then 10,800 times 19. 205.
200.
Lastly, you go to variable overhead. Down they said it's 70. Add everything together for me.
Okay, 828,800 plus 205, 200 plus 70,000. 1104,000.
1,104,000.
Yes.
And it's subtracted from the source. What's the contribution?
Minus 1.
Actual
Six.
contribution.
6. 552,000.
Oh, so if you do it to a sheet balance, you'll be able to reconcile it. Should be the same as this. That's all. You are done. 15 marks. Everything you've done here. If you have any question, ask. Let me just one more variance question I have to solve. And you are good to go for exams. What a wow.
Interesting. I get, please, we don't have any question.
Okay, so I'll see you when I see you again. And please, you have to complete all the questions. Okay, so reconciliation statement started from here. Okay, so that's all. I think we are through now. Okay, so any other questions?
No, please.
Okay, so we are done with the game. I'll see you when I see you go in. Next meeting, maybe tomorrow evening, we can do all night after the PSA class to complete the whole show for you. Thank you.